All right. Hello, everybody. Thanks for coming. Sorry we were a couple minutes late getting this started. Super excited today. We have Chris Danzig, who is a venture partner at Interplay out of NYC. We have been looking at Interplay a bunch, doing some really innovative things and kind of reflective of interesting things that we're seeing in the ecosystem, where VCs are now kind of reaching back to the earliest stages, nurturing companies, investing in them early, not just via cash, but also services and support, and really providing this tip to tail set of services and support that we think can really increase the number of successful entrepreneurs. We will record this session today and we will send it out afterwards. Chris, you might have been surprised by that. We'll make sure you look very nice.
Yeah, too late.
And if you have any questions during, please pop them in the questions box. I will keep track of them. I will interject them and interrupt Chris if they are immediately topical. If they're not, I'll keep them till the end of the presentation. And yeah, I think with that said, I will toss it over to you, Chris. Introduce yourself and tell us all about Interplay.
Sure. Okay. Hey, everybody. Thanks for joining us this afternoon. I'll talk briefly about myself and kind of what has led me up to Interplay, and then I'll talk about Interplay. My career has been circuitous, originally starting in television, working in late night television for an NBC show called Last Call with Carson Daly, 1:35 in the morning. And that show picked up and moved out to Los Angeles, and I naively stuck around in New York and thought I'd find another job in television and couldn't. And I fatefully met a friend of a friend who was creating a tech startup and asked me to join him as a co-founder. Said, "You know how to code, right?" And I said, "Yeah, enough. Sure, I can fake it." And we wound up building a startup that was successful enough to end my career in television and begin my career in tech. And so that was back in 2004, if I'm remembering correctly. And I have been working in and around the tech and startup ecosystem ever since. So I did a number of venture-backed startups, which is actually where I met Pete back in probably 2007, give or take. My
Right.
math is getting shady, as you can tell with the gray hair. It's been a long time. But a number of venture-backed startups, some successful with exits and some less so. So I've seen the patterns and the anti-patterns of the startup world, and was eventually brought into AOL Ventures to run a venture studio there. Long story short, they never really got the opportunity to see things through as political winds blew at AOL, so I was only there for a short period of time. But what was interesting is I was able to take a lot of the IP out of the lab upon my exit and start my own venture studio. So for a long time, I ran my own venture studio. Again, some successes, some hits, and some misses. And did that several times over in terms of number of portfolio companies, and kind of reached the end of the road. And kind of my model for my own venture studio was finding folks that had domain expertise, but didn't have the knowledge in terms of starting a company, building a team, raising capital, finding clients. So my deal with them was, if you quit your job, I will help you get your company up and running. I'll come in, I'll help you build the product and find those first clients and build out the team. And then when it's kind of self-supporting, I will slowly back out of the equation. And so once I exhausted my personal network and my friends of friends, I had kind of run out of options, and was not, didn't have anything that I was super excited to work on myself. I kind of hung out for a while, and truth be told, moved out of the city to the burbs during COVID, and the the desire to interact with other human beings became that much greater. And I went out into the world to see if I could find something where I could actually contribute some value somewhere, and I came across Interplay. Interplay's history is one that's really interesting, and their narrative is interesting. So this is where I will transition over to kind of the story of Interplay. And maybe I'll share my screen because I created a very budget little slideshow. So now the question is, how do I do that in GoToMeeting? Let's see.
I may need to make you a presenter. Oh, I think it's been done.
There we go. Show my screen. Okay. Can you guys see my screen now?
We can.
Okay, great. So this is Interplay. So this is a cheesy little joke that I just came up with a few moments ago. That was the last slide, not the first one. They look the same. Interplay is a venture platform, and that really doesn't mean much. But the idea is that we ultimately want to have a product or service or tool for entrepreneurs on their journey, anywhere from the time that they are inspired to the time that they are retired. That's totally not approved by our marketing department, so don't hold it against them. Let's talk about kind of the origins of where that came from. So Interplay started its life about a decade ago as a collection of service startups, all centered around trying to create a platform to help other startups scale and succeed. And so kind of in that offering of services, we have professional development, legal services, accounting services, offshoring, digital development, insurance, marketing, and we're trying to create a really robust platform where kind of no matter what you may need as a founder, we have something that can help fill that gap. And so we operated and scaled that list. We now have 9 total companies under the umbrella in our foundry. We have a little over 500 employees, and most importantly, we work with about 1 in 10 venture-backed startups in the United States. And working with such a broad customer base gave us a really unique data set from which to start to judge other companies. And we can now determine what sectors are hot, what strategies are hot, and we can take any company and benchmark it against the growth rates that we know exist in the industry. And so about 6 years ago, on the back of that data and the back of that ability to assess young and growing companies, we launched our first venture fund. And so the venture fund is a traditional Series A fund. We cut checks of generally around $1 million into rounds of between 5 and 10. Although the term Series A, apparently includes $100 million deals now, so take that for what it's worth. We operated in a pure generalist investor pattern, a pure value investor. There's no strategic overlay. We are just looking for companies that we think have the right velocity, trajectory, strategy, team, market to be a success. And if you look at our portfolio, this is a small portion of it, but if you look at our broad portfolio, it includes everything from hardwood flooring to space travel. So we really are generalists. So everyone says they're generalist investors. Very few people will really invest in just about anything, but we do. Part of the process, of course, of running a Series A fund is meeting with companies that are a little bit stage early, getting to know those founders, and hopefully, if there's an exciting deal to be a part of, getting in on that deal. And every so often we would find founders where we loved the team, we loved the product, we loved the market, there was huge opportunity there, but those companies would fail to thrive to the point where we could invest in them. Sometimes they'd straight up go out of business. And in chatting with those founders, occasionally they were failing to thrive for reasons that we thought we might have been able to help. And that is obviously intensely frustrating for us to see an opportunity that just never quite materializes. And occasionally, we decided to jump in when we saw companies that were really genuinely exciting to one of the founders and say, hey, we want to work with you for a little bit of time. We think we can help you do X, Y, and Z. We think these 3 things you might need a little help with, but otherwise you guys are awesome. And of the first 6 companies that we did that with, we saw these crazy outsized returns. And so obviously there's luck, there's macroeconomic influence, there's all sorts of things, but there was also a thesis that came out of it. And the thesis was that startups and startup health is a lot like human health, in that early intervention yields these compounding long-term effects. And the earlier you can become operationally efficient and operationally excellent, the easier it is to sell, the easier it is to hire, the easier it is to capitalize. So we decided to formalize that kind of ad hoc pet project program into what is now our incubation program. And the incubation program at the core is still the same value proposition, working one-on-one with the partners at the fund to identify a very specific set of KPIs that we think we can help with. When we formalized it, we also added a few more value propositions, about $250,000 of service credits from ecosystem partners in the tech world, Google, Microsoft, Twilio, SendGrid, you name it. And we also invited about a dozen friends that we think are really good at some facet of startup operations to come and meet with all of our portfolio companies one-on-one. And so over the course of the program, the portfolio companies will get to meet with someone who's great at accounting or sales or marketing or engineering or design, understand how to overcome the problems that they currently have, but also build a really valuable Rolodex. So as they move forward, they have a personal connection with someone, and no matter what the challenge, they have someone to reach out to. And so that became what was until very recently the most recent product that we offered in the spectrum of value. And so as you can see in that timeline, we have incubation, which is kind of earliest. We have a foundry of services that we can offer to help companies scale and grow. We have our venture fund for capitalization. And as of about a month ago, we started a family office. And obviously, if you're good at the first 3 steps there, you're going to have founders that have a bunch of new wealth that don't necessarily know what to do with it and don't have a trusted source to help protect and grow their wealth. So we've created a tool for a bunch of our founders specifically to reinvest, protect, and grow their wealth. So that was very long-winded. I apologize, but a good overview, I hope, of the Interplay platform and how we hope to serve startups at all stages, scale, and succeed.
Awesome. Thanks, Chris. And
Sure.
as I said, really exciting, and I think really overlaps with what we're trying to do at Gust as well. Like a little bit of prevention at the beginning can be super powerful. And I think one of the things that we find really often too is that people coming in from a builder background or a designer background or even a marketer background have all of these great ideas and have all of these great skills, but there's a really interesting flip and overlap that needs to happen, turning like all of those good ideas into an actual business. And
Mm-hmm.
that's where so much of this operational like input and experience can be super helpful.
Yeah,
Um,
yeah. It's funny. There's like an adage, which I don't know if it's true, but it sounds good, which is so much of the early startup experience is not about executing right. It's just about not failing. And there are so many different ways to fail along any number of the verticals that you just spoke about, right? There's go-to-market fails. There's unit economics fails. There's fundraising fails. And so having someone who's trusted, who's been there, knows where the trappings are. We have found, and I'm sure you guys, it sounds like, have found the exact same thing. We have very similar value propositions, is a hugely valuable asset early on in the development of your company.
awesome. So anybody in the audience, if you do have questions, please plop them in and we will just open up the floor to Q&A. And as we wait, I'll ask my own questions
Yeah.
because as a person even working on a startup that helps startups, it's super interesting.
Mm-hmm.
So just in terms of getting involved with Interplay from the entrepreneur or founder standpoint, what are the different entry points? What are the different stages? If I am an idea stage founder, where do I fit in? Kind of walk me through the different entry points for founders.
Yeah. So from a pure logistics standpoint, we have been grappling with this for a while of like, how do you wrap all of this into something that is digestible? Because forcing people to go inward and be like, well, am I here or there? It's unclear, is a little bit of a challenge. So we created what we call our Engage portal. Actually, internally, we call it the pipes. But basically, if you go to interplay.vc, there's a big ol' Engage button, and it will bring you to a type form that will collect a bunch of information about you, where you are, what revenue you have, if you're at the idea phase, what services you may need, and then it will direct you and your data to the appropriate people within Interplay. So you don't have to sit there and kind of do the calculus. Like we'll kind of do it for you and route you to the right parts of the system. With regard to like what types of work you would wind up doing with us, the incubation product, which is what I manage, by the way, I don't know if I mentioned that, at Interplay, is really the first official touch point, with the exception of a very early fun thing that we've been doing, which is not really part of Interplay, but it's is this a thing, where we once a month invite people to come just hang out with us. It's not a pitch session, it's not a demo day, it's a let's crack some beers or whatever it is you like to drink to relax and enjoy, and sit down and throw some ideas around and see if there's a viable business in it. And so that is a fun way to kind of engage with us early on. And you can sign up for our newsletter if you're interested. But beyond that, once you've gotten to the point where you're committed to actually doing something and you've vetted it out enough that you're ready to rock and roll, then incubation is definitely the first step. For us, incubation's a tricky one because we are looking for all of the traditional venture metrics, right? We want a company that has a good market and a good team and a great product, but the incubation program doesn't capitalize. We are a service-only product, so we are looking for ways where we can generate more than enough lift to justify the equity that we take in exchange. So the percent of companies that incubation takes is really, really small because we need to find a truly venture backable company where we think we can go in and move the needle significantly. So we're looking for those folks that are almost there, but like are missing one or two things. And often you can get a sense of that where there's kind of two big trajectories into incubation. One is people that have gone out and tried to raise, but they're having difficulty raising, and they're hearing about maybe a problem they're having where their like founding team isn't necessarily right, or the unit economics aren't there, and whatever it is, when they went to go have those angel conversations, it just didn't click, and they know something's not right, but they're not sure what it is, or they know what it is, but they don't know how to solve it. The other side of it, and we tend to work in incubation with folks that are on either side of seed. The either side of it is folks that have invested in something and know what the problem is for sure, and refer them to us and say, hey, these guys really need help with their go-to-market strategy, or their product is awesome, but it's hideous. Someone needs to go through and work with a UI designer with them, whatever it might be. So those are the types of companies that we're looking for kind of on the earliest side of the spectrum.
Awesome. And what does that equity arrangement actually look like through the incubation program? Do you have a standard one, or do you
We
scale it
do.
based on?
Yeah, no,
Okay.
we try to be as transparent. Like, I hate like, we'll size you up and we'll get a sense. So for incubation, it's up on the website. It's if you're on either side of a seed, it is 5% flat out. And we have occasionally made a couple of exceptions for companies that have done multiple price rounds, and we have a few of those that have come through incubation. And so occasionally, when it's gratuitous, we can negotiate. But for the vast majority of the folks that come through the program, it's 5%.
Awesome. Very cool. And then talk to me about the investor side.
Yeah. So the investor side is obviously a stage out, and you'll note that we kind of intentionally put an air gap for the most part, between the incubation companies and the fund, where most of the incubation companies are pre-seed. Occasionally they're on the other side of seed, but so they go out and they'll raise a round. We don't participate. We generally don't do seed rounds. So you avoid signaling problems, which a lot of other platforms that do have a continuum of offerings, the life cycle funds, you always have these signaling issues where you participate in one round and then you don't the next, and the company's screwed because every other investor wants to know why the guy who knows much more about your company and has a piece of your cap table isn't putting more money in. So for us, we intentionally avoided the signaling problems for at least the vast majority of our companies. So we tend to invest, as I said earlier, about $1 million on average into larger rounds of generally between 5 and 10 million bucks. And we're looking for, which is probably not a surprise, but companies that have solid momentum. And so if I had to generalize, in your seed, you want to get to the point where you're proving that it is scalable, and in your Series A, you're pouring some gas on that fire and really scaling out. So we're looking for companies that the machine is proven to work, and capital, we know, will go immediately serving towards the quick and effective growth of the company.
Awesome. Very cool. And what is the LP composition in Interplay right now?
In terms of
Is it
Like,
mostly people who have come through like the Interplay ecosystem before? Like
oh, it's a
where?
good question. No, no, it's not mostly there. I mean, that would be lovely. We do have a folks that have gone through and obviously contributed money back into the funds, but the LPs are kind of as you would expect, mostly institutions and high net worth individuals. We are not Sequoia or Upfront, right? Like we don't have $2 billion under management. We are, and not that they're not deliberate, I don't want to say that, but we're a top 5% performing fund for the past 3 funds that we've done, and we don't make a ton of investments, but the investments that we do make tend to perform. So we're pretty quantitative in our assessment of these companies. We're looking for kind of very specific things in our investment strategy, and so our LP base is kind of reflective of that. Like we're not out raising $1.5 billion from these massive institutions. It tends to be what you would expect of a fund in the sub $250 million range.
Awesome. Thanks for the clarity. So interestingly enough, oh, there we go. My questions have finally come in. I was not able
I've
to see
certainly
them.
said enough
So, so
to
sorry.
intrigue somebody or offend somebody.
I don't know if we had a GoToWebinar issue or a me using the GoToWebinar interface issue, but okay, let me go through. All right, here's a good question. US centric or global?
Oh, good question. Primarily US centric, but we have made a few exceptions to that. And really depends too on whether we're talking in the incubation side of things, we tend to be more global. And on the fund side, we tend to be much more US centric.
Awesome. All right, we've got a question in here around COVID issues and working with investors. Have you noticed any changes, any tips on navigating the new remote world or taking advantage of the new remote world as you're kind of coming through this process?
Yeah, I mean, I think it is skewed in the way that you would expect, which is probably a positive thing, which is the exposure for the folks that are in the major metropolitan areas that are tech centric has gone down. Like the meet and greet and social entropy opportunities of just like being at the parties and the launch events and whatever has gone away. But it has brightened up spots elsewhere. And like, there's also like the whole Miami thing that happened during COVID where like a lot of companies picked up shop, moved down there. So, I think it is a net positive. I think that venture has probably become more accessible in general. And in terms of meeting folks, for me, I'm probably more out there than I used to be because to go to all of these digital events, I can do like 3 or 4 a day if I
Yeah.
need to. Where in the olden times, like I'd be at one event and that would be it. So I'm probably encountering more people than I used to. The depth of the relationship that I'm forging with them is certainly not nearly as significant. I'm not bumping into people. We're not going out and grabbing drinks after events or whatever it might be. But in terms of just getting a foot in the door and being like, oh, hey, I presented to you at this thing, or there was this upstream digital event and we got 5 minutes to chat in the rotation, whatever it might be. I think I am seeing more people at large than I used to, but with less of a connection.
Awesome. And then I guess there's an interesting follow on there. Have you seen any change in like the regional dynamics of folks coming to Interplay over the past 2 years?
It's a good question. Yeah, I think it's become more global, but I may just be being biased just because my portfolio has become more global. I don't know if that's a generalized trend or one that's specific to me. But I'm starting to see, I feel like the startup fever that was and still is so pervasive in the US and especially on the coasts, you're starting to see, like, it was there in Israel, it was there in the UK, right? There were definitely hubs elsewhere, but you're starting to see it in kind of more off the mat places in other parts of the globe as well. And I think perhaps because of the virtualization, I'm having more of those conversations than I otherwise would have, because more of my time is now dedicated to doing virtual meetings, whereas
Yeah.
previously I would have been reserving more of it for in-person events and in-person meetings.
Yeah, it's really interesting. My schedule has similarly changed, whereas I went to nothing virtually before.
Yeah.
I now go to so much virtually now.
Yeah.
I think this is a good follow-on, and I think you answered the majority of this, but are you taking startups from Australia, and can we engage virtually? I think geared toward the incubator, it sounds
Mhm.
like yes.
Yes.
And so what does engagement look like? Is there any difference between engaging Interplay if you're New York City based or if you are Australian?
Uh, no, with the one exception, I have one portfolio company in New York City right now, and occasionally I actually get to see them and have drinks in person, which is nice. But other than that, the value proposition is exactly the same for everybody. The program is virtual first. We're not meeting up. There's no cohorts. I don't think I mentioned this, and it's definitely worth mentioning. Because of the nature of the way we engage with our portfolio companies in incubation, we work with a really small number of companies every year, like 15 or less, because it's the partners working one-on-one with
Yeah,
the co-founders. It's not something that scales. Like, I think Y Combinator's last cohort was like 98 companies or 120. I forget what it was, but it was a massive amount of
that's
companies.
huge.
Our value proposition is at the other end of the spectrum. And don't get me wrong, Y Combinator has lots of value. They have a very bright spotlight to shine on people, and they can certainly move capital in your direction. But if your objective is to really dig in and solve the operational challenges of your company, then we like to think that we offer an alternative solution that is perhaps better in that specific vector. So yeah, being digital first and global, Australia, come on at me. Would love to chat. Click on the Engage platform. I think mixed in there was the question with regard to, like, what does the actual engagement look like, and the process look like for
Yeah,
Interplay. So the application process is 3 steps, and it's pretty straightforward. So the first step is always me. If you apply, and this is, I think, a rarity in the industry, if you apply, you will get to meet with me. If you go to interplay.vc/engage and select incubation, you will get an email back with a link to my Calendly, and we will have an intro meeting. And so you can imagine I spend tons of time doing intro meetings, but
yeah,
I've been on the other side of the coin, right? Like, I was an early first-time entrepreneur that, quite frankly, no one wanted to talk to at one point in time, and it sucks.
yeah,
And like, I wanted to at least get in the room and make my pitch. So I promised myself when I was on the other side of the table, like, I would do my best to try and chat with anyone. And I do. Like, 100% of the people that apply to Interplay, I will chat with. The incubation program, I will chat with personally. So that's always the first step. If things go well, if we think there's a really good opportunity there, if the partners agree that we can contribute value, we will have another partner chat with you and have the exact same intro conversation. And you'd be shocked how different the perception of the same
yeah,
company and the same founder presenting the same ideas can be. If there's generalized consensus between the 2 partners after those intro meetings, then we move to a more traditional venture diligence process where we have an associate take a look at your unit economics. We have, look at the market size. We'll speak to third-party potential investors, potential clients, get some third-party feedback, and then we would offer a term sheet. And what's different about our term sheet on the incubation side is we're listing out very specific things we want to do with you. So it might be in quantitative, right? Like, we need to get 6 anchor clients above and get you to, above 100 million, 100,000 ARR. And then we're going to introduce you to 15 investors with warm intros. We're going to work with you on your deck and your narrative for those pitches when we make those intros. And we're going to help you find a technical co-founder if you need one, or whatever it might be. And it's different for every every company because each company is, a one-on-one experience. But we're submitting in that proposal and that term sheet a recipe for our definition of success, so that each one of our portfolio companies at the end of the program looks back and can say, yeah, check, 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 check. These guys did exactly what they said they would do, and hopefully leave that company significantly more valuable than it was when we first met them.
And
The program
that's actually
generally
really
lasts
kind of
anywhere from
fascinating.
3 or 4 months.
Okay, cool. And yeah, that term sheet structure is super fascinating because it makes the calculus really easy to do. Like, okay, given what I have now, and if I believe that these like North Stars are correct,
Yeah,
like, is it worth 5% of my company to have somebody supplement it?
yeah.
And
As you
it's
can
nice.
imagine, we get a lot of the folks that we speak to. Are concerned about the fact that the capital isn't part of the incubation program. And obviously, like, if we were to capitalize incubation, we would have to bring on LPs specifically for that. Like, we can't dip into the venture fund.
Yep.
Like, you can tell people you're going to take their money and invest it in one thing and then surprise them and invest it in something else. And then as soon as we bring in LPs, the economics totally change for the program, where now most of the value is going out the door, but we're burning hours and hours and hours of our own time to work with these companies. So the flip side to that is the cash that you're raising is the dollar bills, or the numbers in your bank account don't make your business any better. You're going to spend that on something. It is a fungible resource. You're going to spend it on marketing. You're going to spend it on product. You're going to spend it on hiring people. And so, if we can come in and help you do those things in the form of services, and make sure that you're doing them right, in a lot of ways, the contribution is so much more valuable than pure capital. The other side of the equation is, in this day and age, by and large, money is fairly commoditized. If you have a decent business and a good team, you will be able to go out and find capital. Capital will probably find you today. Listen, that could change on a dime. The whole
Yep.
economy could collapse, whatever, but knock on wood. Right now, if you're having trouble raising, there's a reason. And so, coming in and working with us and trying to figure out what that is, what's stopping investors from cutting the check, what the red flags are, will solve the capitalization problem. So those are the kind of the two typical counter arguments that we are able to present when people are concerned about capitalization.
Yeah, it's great. And I think it ties into what we're doing or trying to do at Gust too, because the question that we're asking is like, okay, how do you take the step prior to that?
Mm-hmm.
And how do you build something that's scalable enough to put people on the guardrails and provide enough value so that they can get to the point where they can get into something like this, where like the nature of the service relationship escalates and
Yeah,
actually puts them on the right track.
yeah.
All right, I think again answered part of this, but what is Interplay's business model and how does it compare to YC?
It's a good question. So our business model is really easy to explain. It is the success of our portfolio companies. So we don't take any compensation aside from the 5% equity that I mentioned earlier. So if we come in and are unable to help you make your company successful, we get nothing. It's really that easy. The only way we make money is if you make money, and the reality is that for most companies is 6 to 10 years down the line before there's a liquidity event. So that is the entirety of our model, both in the incubation side and the venture side, right? Like on the venture side, we're providing capital. On the incubation side, we're providing services. But both are the same play, where we're going to take a piece of your company and hopefully give you the resources one way or another to help make you successful. And the only way we succeed is if we do so at the end of the day.
Awesome. Nice to have incentives aligned for sure.
For sure.
This one, I guess, is testing your incubation advice. But
Uh-oh, here we go. Bring it on.
what's better, a multi-product idea or a single product idea?
Oh, listen, I'm really easy to answer that one. A single product idea. The fact that you're calling it a multi-product idea off the bat is immediately a red flag to me, because it implies in your mind that they are somehow disparate. You need to have, for your business, for your product, for your go-to-market strategy, a single North Star, which is a sentence or two that describes what you are trying to do and the value you are trying to provide to the world. If you have more than one, you're hosed, because at some point they will cannibalize each other and you will not know whether to turn left or to turn right, or to say yes or to say no, and it's going to be a major problem. You need to have that unified vision. So if you're calling it a multi-product solution, stop and think and try to figure out, like, is it really a multi-product solution? Maybe it's not. Maybe there's like a single umbrella that wraps all of this and makes it conceptually a single product with multiple different facets. But universally, do fewer things, do one thing if you can, and do it really well. Then let yourself expand outward if need be. You know, if you're Amazon, sell books, be the best damn bookseller out there. Then when you're crushing that, expand to other products, offer, you know, cloud resources for hosting, like, you know, expand outward. But first, be the best damn bookseller, and then figure out how to take over the universe.
Yeah, I think an interesting flip and a good way to potentially contextualize that too is, don't think of it in terms of multiple products. Think of it in terms of how many problems you're solving, because
Mm-hmm.
you should just be solving one, right? Solve one well. If that
Mm-hmm.
takes multiple products in your technical brain, sure, but your customer doesn't care. They've got a
Right.
problem. You need to
Yeah.
solve
Yeah.
it. All right. Let's see. I'm going to skip some of these more tactical questions.
Okay.
All right. Will the 5% equity you take you through the entire process?
Will it take us through the entire process? So I don't know how to interpret that.
Yeah, Sarah, if you can clarify in the chat, I'm imagining you're asking, does that 5% take you all the way through the incubation program?
Mhm. Yeah, that's for incubation. It's 3 to 4 months. We're working with you on very specific things that we define up front, and it's a 5% ask. The fine terms of the incubation program are that if you wind up raising a Series A, the venture fund reserves the rights to put in at least $1 million. So, if we are helpful in incubation and you get to the point where you're raising a Series A, we reserve the right to give you more cash and buy up more of that round. But yeah, I mean, we dilute. I don't know if the question was one of dilution, which is, we don't take governance, we don't take preferred in incubation, we don't take governance, we don't take preferred stock, we take common stock. We're basically like another employee. We get diluted down in subsequent rounds the same way everyone else does. So our 5% certainly winds up being less than 5% by the time you're selling your company. But hopefully by that time it's worth so much that we're very, very happy to have our 2.5%.
Yeah, awesome. All right. Space wireless tech with seed stage funding from the NSF ESPER program. Should we wait till we are ready for Series A funding round to work with Interplay? I think the answer there is no, right?
Yeah, I think the answer there is no. There's one really easy way to find out, which is like, let's chat. Like, jump on and check incubation. We can chat and see if it makes sense for the incubation program. Otherwise, you can wait. I thought I heard space tech in there somewhere. Was
Yes.
that mixed in? Yeah. So we have 2 space tech portfolio companies, one in incubation, one on the venture fund. One is Launcher, and the other is Small Spark, which is actually based in the UK. So we love space tech. We think, in fact, I would dare say we're certain that industry is going to explode over the next, I would say, even 5 years. And so we're excited about anyone who's doing something innovative in space tech.
Cool. And I think you touched on this. And Joe Clark, if you want to reframe this question at all, based on the whole presentation, sorry, I couldn't see questions earlier, but some questions around the criteria for entry into the incubator, and then potentially the fund. I think it's around like, okay, if this is your criteria, like why go with you rather than approaching somebody like Sequoia?
So are you talking about at the fund level?
Well, I think it's an interesting question, and I'm assuming it may have come in before we we got to
Okay,
talking about the
okay.
incubation stuff. But I guess
Yeah.
like a maybe talk a little bit about just differentiation from traditional VC. I think obviously the incubation part is different, and
Yes.
maybe answers this question straight out, and heck, maybe even answers the differentiation question at the venture fund level. But
Yeah.
I guess my perspective, right, from looking at this is having having incubation at all is really interesting.
Mhm.
And you are instead of just having a set of investors that are like, yes, we are value add investors and we can connect you, you're also lending operational experience and like boots on the ground.
Yeah.
And then like my perspective would be then like, okay, at the fund level then not only are you providing capital, but you've also demonstrated to at least some of the companies that you are also providing operational experience, and again, help and support, plus an actual network of service providers that can supplement that stuff.
Yeah. Thanks, Pete.
Okay, cool.
You nailed it. Yeah, I mean, obviously, Sequoia is a great fund. They have a great network as well. I like to think we also provide a kind of more robust offering than just your traditional VC that is maybe a couple of guys in a room investing some people's money. We have the service platform that we can help provide services, certainly at potentially discounted rates. We have the incubation platform if you're earlier on, and a network of between the partners, the portfolio CEOs in the venture fund, the portfolio CEOs in the incubator, and the portfolio CEOs in the foundry. We have a distribution list called Friends At, which is pretty much when you need to send someone an ask within the ecosystem, you can bounce it out. And kind of a classic example recently was like had someone who needed to get in touch with Michelle Obama. So we sent a Friends At, and like 3 different people were like, can hook it up. So like having that big a network with so many different umbrellas to tap into has a pretty significant network effect, I think.
Yeah, I think if you can get somebody in touch with Michelle Obama, then that's a pretty significant network effect for sure.
It's a arbitrary metric of
Yeah, an
success.
arbitrary one. Yes,
It was
for sure.
the classic Michelle Obama test. But
But
but it was
possibly a
a real
decent North
fascinating
Star for a community of support.
yeah. So like even with Small Spark, and I guess I could do this on and on because this is pretty much what we do nonstop all day. But like Small Spark is a UK-based aerospace company. They're providing suborbital and orbital launch services. They want to expand to the US, and they were like, "Hey, who can you put us in touch with in the US government?" And I was like, "Well, let's find out." Sent 2 emails, and we had them in touch with the director of something which I didn't even know existed called the Defense Innovation Unit of the US government, which is specifically there to help early stage and kind of startup-y companies interface with government contracts, who brought in like the head of the US Air Force and a representative of NASA. And I was like, wow, like like maybe this sounds like I'm boasting. I'm not. I'm genuinely impressed by our own ability to deliver sometimes. And this was another one of those situations where like the network just delivers.
And yeah, I think like having concrete examples of what a network actually means is really
Mm,
good. It's something we
mm,
talk a lot about. Like when you network, not just with people who are in your domain, but when you network with people who are building things often and with a lot of different people, the type of network and the things that you can ask it and take from it, and give back to it tend to be completely different, right?
mhm.
So it's this kind of connection. Like people who are working in startups and VC, entrepreneurs often end up on the other side of the table. So forming those connections of entrepreneurial people or people playing in the startup ecosystem, really powerful. All right. Can you explain a little bit how somebody kind of in the incubation program, um, what strategies do you all use to actually intro them to investors going into potentially that seed
Yeah.
round?
Yeah, so it's a good point. So I hate to keep hammering on the same thing, but first and foremost, it's the network. So
Yep.
we are investors. The venture world is not that big. I actually don't know the number, but I'd be curious to know how many venture capital partners there are in the United States. My guess is it's probably in the 10,000 range, give or take. So it's not that big a world, and we tend to know folks that would be interested. The hardest part that a lot of entrepreneurs have is identifying the investors that are stage and sector appropriate. I know I had this problem. It's like there's not a phone book. And so one of the things we did this year, about maybe 6 months ago, was launch something called Thunder.vc. And so it was literally just trying to be a matchmaking service, totally free for both sides. We're not monetizing it at all right now, but we just thought it was time that there should be this thing where you can go on and say, hey, I am an aerospace seed stage company based in the UK. Who should I talk to? And you just click a button and it would say, hey, here's a bunch of people that are appropriate for you to talk to. It's not to guarantee that you'll get that conversation, but at the very least, you'll know that they exist and are the type of person that you could talk to. And so for us, it's a combination of our existing network and reaching out to folks that we've done deals with in the past and have personal and professional relationships with. And now a new tool under our belt is finding folks on Thunder that, quite frankly, we never knew existed. There are a lot of investors kind of in the Midwest that just, by proxy of geography, we haven't come across, but are cutting checks and have strategic value. So we're now kind of adding Thunder as a halo around our core network to help find the right folks for the people in our portfolio.
Awesome. And yeah, I think, that has been a core piece of what Gust has tried to do with the traditional angel groups and accelerators. And it's
And you want to talk
interesting
about
now.
networks? I mean, David,
Yeah.
David has a network that's a network and a half, right? So that's a huge resource.
Yeah, and I think it's interesting now too with the different types of organizations that are getting involved in early stage investing, and individual capital is coming in quite a bit,
Mhm.
and all of these old entrepreneurs, and stuff like Thunder is excellent. There's a lot of stuff out there that is trying to be like the next matching and increase access and make it
Yeah.
easier to find and stay in touch with investors even before you're actually seeking investment, because so often it's like everybody wants a low touch relationship there so that they
Yeah.
can escalate into the high touch relationship as soon as something becomes a something.
Yeah, it's interesting. A buddy of mine, a guy named Sam Lesson, who's out in San Fran, wrote an article recently about how venture is no longer venture, and that as a result of kind of the traditional tech investment world becoming so de-risked, right? Like investing in a enterprise SaaS company is not what it was 30 years ago, right? Like you're not taking a big role on like this new crazy phenomena of like the personal computer. So you're starting to see kind of people encroach into venture from places where they never were before. So you're seeing like these large institutional investors move down and start to do venture in a way, and you're starting to see kind of high net worth individuals do what is kind of technically venture. And so the space is becoming, there's more and more people kind of contributing capital, and you're starting to see what I think is an exodus of, or the very beginning of an exodus of some venture capitalists to more fertile ground, taking bigger risks in things like, again, space travel or crypto early on. And Sam himself is investing in individual creators now.
Yep.
So they're making human investments instead of business investments. So I think if you're in building in what is kind of the now de-risked tech ecosystem, there's more options perhaps than there ever were for going out and finding capital.
Yeah, absolutely. All right. Kathy asks, do we do this through Gust? Super interesting question. So the reason we are here today is because Gust is always trying to find ways to make it easier to access the capital sources you need.
How much did
We
you pay,
thought,
Kathy?
what's that? I know, perfect, right? But we're doing this to kind of assess interest, and the direction we'd like to take Gust now is to make it easier once you come in and tell us about your company to point you in all the right directions, right? So you may not be ready to apply to an angel group right now, Or you may not really want to target angels for your pre-seed or seed, depending on the structure of your company and the abundance of capital and the different capital paths that have come up. So right now, you cannot come to Gust, give us information, and get suggested interplay. But today is the first step on a road that leads to that. We'll be making a concerted effort to put you in touch with the stage specific and appropriate resources that'll help you get to the next step. All right. Clarification around the incubator. There is no guarantee of funding or investment, correct?
Correct. Yeah. No, we are not going to invest it. Not only is there no guarantee, I can guarantee there won't be an investment from us. What we will do is work with you to make sure that your company is really excellent operationally and ready for investment, and then we will work with you to find the folks that will make those investments. So we'll work on your deck, your narrative, the collateral, your presentation, and then we will make warm introductions to the folks that are the appropriate investors for you. But we will not cut a check ourselves.
Awesome. And yeah, I think it's important to understand, Shankar, that that 5% equity isn't worth anything if you don't become successful. So the investment is in services to prep you for capital investment. That capital investment is meant to propel you to Series A. At that point, Interplay is back on the map, and I assume continuing to support you throughout that process operationally.
Yeah.
All right. We've got a few more and only a few more minutes, so I'm going to try to speed through the rest. How does Interplay attack two-sided marketplace chicken and egg problems? I don't know if that's possible to answer quickly, but is it something that you would attack?
Yeah, so it's a good question. The answer is that coming into them cold is always a huge challenge. We generally look for someone to have some level of domain expertise or network in place to help prime the pump. And generally, it is a one-step, two-step type of thing where you're ratcheting yourself up in the scale of the ecosystem. The hardest part is always the first step, right? And it doesn't have to be huge, but it needs to be enough where you have some critical mass that interests the other side of the marketplace. To bring it back, like you need to have either an egg or a chicken or some piece of one of those two things. To come in completely cold is a very, very difficult challenge.
All right, so there are a ton of questions about industries that will Interplay work with this specific industry. So I'm just going to turn it around and get them all answered in one fell swoop. Is there any industry or area or vertical that Interplay will not work with?
No, I mean, if it's legal, we will invest in it. So I mean, if you look at our portfolio, I encourage you to check it out. Women's lingerie, custom sofas, hardwood flooring, human quality cat food. We're truly generalist investors. You'd be hard pressed to find something that we wouldn't invest in if it was a good business.
Awesome. Well, I guess to that end, Calvin Holt is currently, I think, exploring the Interplay site and is asking why energy is not a sector that is available to choose.
Oh, on the Engage?
Yeah, I assume so.
That is a great question. It's probably just an oversight. I'll have that fixed by tomorrow.
All right, awesome. Calvin is always the one to have like the very pointed questions. So thank you, Calvin, as always.
Email me directly if you want, and anyone who's out there, feel free to email me directly. Chris, CHRIS @interplay.vc.
And yeah, we will send some follow-up here with video and some show notes, so you'll have all the information to get in touch. All right. Do you have a good patent attorney?
We do. So one of the services that we offer is something called Bowery Legal, and they can do pretty much any type of law that would be involved in startups. So patents certainly would fall into that. In corporations, HR, you name it. So for sure, if you're looking to have some patent work done, check out bowerylegal.com, and one of the guys over there can get you started.
All right. I think we answered part of this. The incubator program is 3 to 4 months, but additional question here around the hours of commitment. Is this a full-time thing? How is it structured?
Yeah.
Ballpark hours per month?
So, unfortunately, with the incubation program, the answer is like it always depends on the portfolio company. But in general, what we do is we reserve one guaranteed slot of either 60 or 90 minutes a week, where we're meeting, or we're kind of that's literally what I would call our weekly sprint, going over all the stuff that we need to do. What have we done? What haven't we done? Let's make decisions. And then falling out of that are unscheduled meetings where we are either executing, where we're sitting down and wireframing or talking through, banging out lists, whatever it might be, doing work, or doing meetings where we're introducing you to partners, investors, whatever it might be. Or doing interviews. Generally, it tends to be about 2 or 3 hours a week of synchronous FaceTime, and then obviously lots of emails and connections outside of that.
Awesome. All right. I think that might get us to the end of the questions.
Okay.
Right under the wire.
Pretty good timing. Yeah. Not bad. Well,
If anybody
thank you
feels
so
like their
much.
question was not answered, I will go through them and send them all to Chris and make him answer them via email and send
All
them
right.
back out in show notes.
Those are
But I
good. Those are
think
good
we,
questions. Thank you, everybody. I appreciate you guys coming. I hope this was at all somewhat helpful. If nothing else, hopefully gave you a good view of Interplay. And hopefully you got the idea that like our door is open. We're not one of those companies that you need to fight and network your way into. We're all former operators. We've all been on the other side of the table. We know what it's like. We're happy to chat with you and see, how we might be able to work together.
awesome. Well, Chris, thank you for your time. Really appreciate it. Everybody who came, thanks for coming. Really appreciate the great questions. This has been great. We will continue to do more of them. I think there are a lot of exciting things that are happening these days that are helping early stage founders and companies get the resources they need. It's really cool. We love to see it. We're going to hope to connect you to more and more of it as time goes on. Have a great weekend, and we will send out follow-up soon.
Bye, everyone.
Thanks, Chris.